Hello and welcome to the stock specific class here for Thursday, November the 18th. Quick reminder, next week is Thanksgiving. I won't be doing a class on Thursday. I haven't decided yet how I'm going to do it. I might just do a combined market update and stock specific class on Tuesday before Thanksgiving. I've got plans on that Friday, so I'm not doing anything Friday. Most people take that whole weekend off anyway, but I think that's probably what will end up happening is we'll just have the combined. We'll do the market update, and then we'll go over specific stocks as well, review the portfolio. We'll do all that on Tuesday, so just make a note of that. And this is probably mostly geared towards international participants that don't celebrate Thanksgiving on the same day that we do here in the U.S. It's probably just a normal day for you, but we shut everything down, so we won't be planning on having that class that day. So, all right, let's get started with the market conditions. I was hoping that things would be a little bit clearer after Tuesday. Tuesday, there's a lot of uncertainty, and you know, if I were to at least make an observation, I would say that at least as of right now, I mean, things can change, and things have been changing kind of from day to day, but the market is looking more like it wants to break out. We'll take a look at the individual charts here in just a second. As far as the direction alerts are concerned, again, nothing indicating an extreme condition or overbought condition. We're right smack in the buy range here on the momentum, on the breadth, and borderline high and extreme sentiment. But it's been that way for a number of weeks. We've been right in that range, so nothing overly concerning there. With the recent kind of whipsawing a little bit, moving a little bit sideways, the buy-sell ratios have kind of come closer together here. You can see that we were a little bit wide, but all this is suggesting is that again, it's not any sort of extreme. It's not extremely oversold, not extremely overbought. Could go either way depending on how the market wants to break out. The sentiment reading is backed off enough to not anywhere near that red line that we have to be concerned about. Now on the individual charts, let's bring them up here. So on Tuesday, you know, we had the bearish reversal candle on Monday. Tuesday, it looked like we had reversed that. We're looking like it was possible we could break out. It faded a little bit into the close, had a bearish inside day yesterday, and then today, you know, it was down early, and then buyers have managed to push it back up. The more it's kind of drifting those sideways through here, and then through here, the more likely it's going to break out to the upside. And I'm also looking at the Nasdaq 100, which is very close, had a very similar pattern, but it looks more likely it's breaking out to the upside. You can see it's already gone to a new all-time high. We'll see if it's a new all-time closing high, but it's kind of broken out. You look at the Dow. The Dow did sell off, but now it looks like it's come off the lows today. It looks like it could be completing a bullish ABC pattern. It's very close to that breakout area, which is what I pointed out on Tuesday. If we were to pull back, that's an area that I said to keep an eye on of where it could pull back to. Now, but what'll be interesting is to see if it can close higher than where it opened. It has a hammer candle. It is a hammer candlestick formation, which tends to be a bullish reversal candle. But it's going to be a stronger one if it can close higher than where it opened. If it still closes lower than where it opened, sometimes you can get a retest of these lows. It can come down a little bit still in the near term. And it can still do that even if it closes higher than where it opens, but you can sometimes get those retests. But that would be a pretty strong kind of bullish reversal. You can see a kind of a similar one bet down here that kicked off a move shortly after that. The Russell also sold off, but could be in that wave C, wave A, wave B, wave C. Now this one did dip down a little bit below. No, not by much. It's pretty much right at the breakout area right here. So if this is going to start moving up, this would be the area where you expect it to start moving up. So again, it's starting to look a little bit more bullish. Now, again, could this be a kind of a sucker's breakout where the market is just kind of starting to barely break out. It hasn't really had a strong move, and it's just trying to suck people in, and then it'll have a drop. These if this is a ABC pattern, if that's wave A, wave B, and you're going to get wave C, you can get a little bit of a false breakout and then have it drop still. Those are rare, so I wouldn't be planning on that as the higher probability move, particularly when you combine that with the seasonality, the more bullish seasonality time of the year. But we'll see if there's some momentum that'll carry. If it starts to break out here, I think that momentum will carry into next week. The first few days of next week should be pretty bullish. But you really have to worry after that, because without getting a big enough drop, I just don't know if that can be sustained. So maybe you get an early December pullback. Again, I'm not expecting a big correction, but something that alleviates that kind of stretch condition. I want to be careful with the terminology I'm using. I'm not saying it's extreme or extremely overbought, but it is a little stretched, and it's been a little bit stretched. Again, you can see it in the fact that you're just not getting aggressive buying. You're not getting a broad participation. You're seeing a couple of stocks that move for the day. All the focus is on some of those, Nvidia and some of the electric vehicle stocks and you're just not getting that broad-based rally, and usually that's a sign that there's just not a lot of new money to be able to put into that. You combine some of that with some of the new IPOs that have come out. Money has to go into those. Institutional money has to go into those. That money has to come from somewhere. A lot of times those big institutions will sell other stocks to raise money to get into newer positions, and it can just kind of create a little bit more of a stagnant market. You get when you get a little bit of a bigger sell-off, again, prices come down, people are a little bit more aggressive to buy. There's perceived discounts now on these charts as they come back down, and people can see potential upside reward a little bit easier. When you're always at these all-time highs, you wonder how much longer it can keep doing that, and so it tends to stagnate a little bit sometimes. Now the conditions are looking like I said, particularly with that QQQ chart breaking out, and I would assume it's going to hold that breakout. A lot can happen between now and the market close, but I think, like I said, that with the fact that tomorrow's Friday and then next week tends to be a very bullish week, I would interpret that as being pretty bullish near term. And so I am going to add some things to the portfolio today. But before we do that, let's go and look at some of the individual sectors, some stocks within these individual sectors. Now, one thing I did, because we've consolidated a little bit, there's a tendency to obviously we're looking for 98 strength rank, and then we kind of work our way down from there. lately we haven't had a lot of 98 strength rank stocks that we've been trading, and I think that's showing up in could be a contributing factor to why the portfolio has been a little bit stagnant. That happens. You just can get when you're in the later stages of some of these uptrends, or if you've had different sectors that have sold off pretty deep, you get it's harder to get those higher strength ranks. Sometimes you got higher strength ranks, the charts are a little extended, a little bit. You don't want to chase those. You want to. That's why it's nice to get these periodic pullbacks in the market within the trend, because it creates those stocks tend to hold those high strength ranks, but they go back to those hold signals, and you get a lot of you get a lot of stocks. So let me just kind of illustrate this here. You get the stocks within these trends, and if they can periodically pull back, they maintain those high strength ranks, but they also go back to the hold signal from buy to hold, and they give you the ABC pattern, the correction. They give you the clear trend, and you wait for them to go back to that buy signal, and they maintain that 98 strength rank. They're much higher probability trades. Again, there are just times in the market where you don't get as many of those, and you have to kind of work your way down a little bit. You can just sit out, not do anything until you start seeing more 98 strength rank stocks. But most people tend to want to be at least somewhat active. They don't want to just be trading 3 weeks out of the year or something. But as you move down that list, you start getting those kind of lower strength rank stocks. You might not always get the performance out of those as you would with higher strength rank stocks. One of the things, though, I do from time to time, though, is I start looking into the buy section here. And that's what I did today. Is what you can do is you can find some stocks that maybe have been in a buy signal for a while, but they've gone through a correction. They've been trending up, and they've had a buy signal all through this move right here, and now they're pulling back. They have a nice little pullback, but they've maintained the buy signal. But the chart is showing that they could be ready to start another upward move. It might not have gone back to hold for you to see it in the hold section. So now, I don't do this all the time, because a lot of the times I can find plenty of stocks that are in the hold section, and then like I said, just like I taught you put it in your watch list, you put an alert on it, it'll tell you when it goes from hold to buy. It's a very simple approach. But if you find that you're not getting the best quality, or you're seeing the same names every time you go into that hold section, maybe take a peek into the buy section here and see if you can find some charts that where stocks have pulled back. And like I said, I'll show you a few examples of those, and I'm going to be placing a trade on one of those as well. At least as long as it still looks good when the time comes around to manage the portfolio. But under retail, on this one, let's just go under the hold section first. And I like this STKS, the one group, 96 strength rank. Switch this back to signals here. And again, this has been a buy signal. It's just recently gone back to hold. Again, higher highs. It's had higher highs, higher lows throughout this run up. If this can hold as a higher low and start to move back up, go back to a buy signal, you can assume that trend is going to continue. Sometimes you can take a peek at a little bit of a longer term trend. And you can see this one's been in a steady uptrend for over a year. So it's the assumption would be that it should just kind of keep moving in that direction. Another one, Kirkland under retail, KIRK, 86 strength rank, so I dipped down a little bit here. But there again, it's a nice strong uptrend. You had a nice little base right through here, higher highs, higher lows. It's acting like an uptrend. Pulled back right here. Had a little sharp sell-off yesterday. A little bit of an indecision day today where there are some buyers there, but there's buyers and sellers. There's a little bit of conflict going on. Again, you're not trying to buy right here. You're just waiting to see if it puts in a higher low. Even if it does drop a little bit lower, you can wait to see if it puts in a higher low. Here's a breakout area right here. So it could, well, actually with that intraday low today did kind of test that breakout area. So you could wait to see if it starts to move back up, goes back to that buy signal. This is one that I'll go ahead and put in the watch list as well. I need to put the other one in the watch list. And I'll put the alert on it. And real quickly here, let me add that other one too, the STKS. All right, under computer and technology, I'll start with the holds, and then there's a few. Oh wait, no, retail. There is one under buys that I found under sectors, retail under the buy section here. I liked this Jill Incorporated, JILL is the ticker symbol. 96 strength rank. But hopefully you can see why I like it though. It looks like it's coming out of a correction right here. It's consolidation right here. Recently broke to a higher high right there. Had a lower low right here. Had a higher high. What I'm looking for is for this to be a higher low. It looks like it's in the early stages of doing that. It still hasn't moved up very much here, but that's what I would be kind of looking at. I'm going to go ahead and add this one to the portfolio, and I'm going to put my stop down here just to give a little bit of room to make sure it can kind of put in that higher low. But this one looks like it's acting like it's turning the corner and wants to go higher. Again, I'll put it in the watch list for now, but I'll probably be doing this at the end of the class when I get into the portfolio. Just going to save it in there right now. I'm not going to add an alert because it's already a buy signal, so I don't need it to tell me to go from hold to buy. It won't work that way. So, all right, let's get into computer and technology. Let's start with the holds. I liked this AEHR 99 strength rank. And it's a pretty big down day today, but again, I'm going to be waiting to see if that's like a wave C, if this is wave A, wave B, wave C. Correcting this larger move up. Now, it could drop a little bit further. You'd maybe look for a little bit of a bullish reversal candle somewhere. See if it can start to move back up. Go back to that buy signal. Who knows, though? This could be a trend reversal, and this thing could be ending up down here. If it does, then it should go back to a buy signal. It should, in fact, go from hold to sell, and we'd never get the confirmation, and so we don't care. But there's potential there. This is just kind of the final part of the correction within the trend. And so I'm going to go ahead and add this to the watch list, and I'm going to put the alert on it. when it goes from hold to buy. Another one in computer and technology under the holds is this if I can find it here. Hold on. This PERI, it's a 94 strength rank. Again, very similar. It looks like this could be an ABC correction in here. Now, it's also possible that this is the peak and this is the start of maybe wave A, wave B, wave C. This has a lot further to drop. But that's why I'm just filling in the watch list. We'll see how it kind of plays out. It can start to move back up. This does look corrective within the context here. It could be an opportunity. We're not looking to get into it today anyway, so we'll throw it in there and keep an eye on it. And then there's one more, I think, in here under. It might have been under the buys. Let me just double check that before I switch over. Yeah. All right. So let's go into the buy section under computer and technology. And one that jumps out is this KOPN. I think we've traded this before in the portfolio, if I'm not mistaken. But it looks like it's looks like it had this breakout move higher to a higher high. This looks like an ABC. It's down a little bit today, but we'll see if that ends up being a ABC correction. Actually, this is going to go back to a hold. This will show up overnight as going back to hold, and then we'll wait for that confirmation. I can't put an alert on it yet because it's showing it it'll be registering as a buy signal. Remember, this update's overnight, so I'll have to wait till tomorrow. Tomorrow it'll be under the hold section. I can put that alert on to tell me what goes from hold to buy. But we'll go ahead and add this to the watch list anyway. Another one in the buy section here. This VUZI 95 strength rank. Again, it's down a little bit today, down a little bit big today, but again, I'd like to have the drop. It's now having higher highs, higher lows through here. That's a pretty big drop, and you'd want to probably start going up here pretty soon to make sure you maintain that higher low. But it doesn't hurt to just throw it in a watch list to keep an eye on it, see how it acts. And a couple more here. Your computer and technology under the buy section. This ATOM 93 strength rank. Now, all this has done is just pulled back a little bit, and it's not real back and forth. It could just be that this is wave A, you get a bounce for wave B, and then you get wave C. The reason why I want to throw this on the watch list is it's right here's your breakout area right here, and you're right back at it. This could be an area where buyers show up, and sometimes you can have those just real quick corrections, and then they go right back up again. It's going to go back to a hold signal today. So we could put the alert on tomorrow to have it tell us when it goes back to buy, but I thought I'd throw this one in the watch list. And then another one that I've liked for a while is in computer technology is this there it is. Bill Holdings, BILL ticker symbol, 93 strength rank. Kind of a fintech type stock, but I like, you had this nice little bull couplet handle formation right here, broke out. Again, you can measure the breakout, the top of the bull, the bottom of the bull, break that out. Look about where it ran up to. And then since then, it's kind of backed off into a possible ABC pattern that's kind of pulled back to the top of the bull. Now I want to see what happens in this area here. Does it start to move back up? And now it went to a hold today. Same thing. We could throw an alert on it tomorrow when it updates overnight. But for now, we'll just put it in the watch list. And then a couple more under business services. I liked this MOGO, 90 strength rank, MOGO. Again, it looks like you're possibly turning the corner here, higher highs, higher lows. Looks like a possible ABC correction right into here. We just wait for that thing to go back to a buy signal, see if it can go back to a buy signal. So let's go ahead and add that to the watch list, and we can put the alert on it. Oops, wait a second here. Oh, it's already showing a buy. So that's weird. Oh, that wasn't. Oh, there's Mogo. Okay, there it is. I had to scroll down one more. I'm like, that was the wrong stock. So here we go. Yeah, we can put the alert on it from hold to buy. And then under business services, I also like this Loop Industries, LOOP. It's an 86 strength rank. So on some of these, I'm dipping down a little bit, but I like the overall pattern on this. I like this big, deep bowl-shaped move. It's kind of gone up to the breakout area. Now it's pulled back in kind of a ABC formation here. Again, it's down today. You want it to start to move back up here pretty soon. Don't want it to get down too far. But we can kind of keep an eye on that. We don't have to do anything on this right now, but let's go ahead and put that in the watch list, and we'll put an alert on it. I might have to go and weed out my watch list. It's getting pretty big here. And then I threw in one more that I just found, just going under the muscle stocks. Sometimes you can find some patterns. I go under the muscle stocks, and you can go into the new buys or any of these really. But new buys are ones that have just gone back to a buy signal, that they could be ready for potential trades right away. But I liked Eli Lilly. Again, pretty well-known company, drug company, pharmaceutical company. It's only 82 strength rank, but again, I like the pattern, very similar to the one we just looked at, where you this big dip, went up to the previous breakout area, and then it's kind of pulled back in an ABC. And this one has gone back to a buy. And this is one I think I might just go ahead and consider for a trade as well. I'd probably put the stop down below this, so it'd be a really tight stop. That's probably what I'd want. So the lows, let's put the stop at about 255. That seems about right. All right. Now there's a couple others we could add. I wanted to add that JILL. I mentioned that earlier. If we go back to our watch list here, like I said, there's a lot of them in the watch list. I'm not going to go down through all of them in the watch list, but this CDR is one that I'm kind of taking a look at. Again, it's kind of got this little bull-shaped move, and it looks like it's trying to break out, tried to break out right here, tried to break out right here. Now, went to a hold signal yesterday, but it should go back to buy if that holds today. So if that price action holds true. Now this one I might just give another day to see if it can show me it's moving up a little bit higher. I mean, we're so close to the breakout. Not that sometimes if you wait too long on the breakout, it can make a huge move, and now you're chasing it on the breakout. But I think I'd just like to see a close higher than the open. We haven't seen that here. In fact, let me turn the signals off. You can see what I'm talking about. So this on Tuesday, it opened here, it closed down here, closed lower than where it opened. Still just moving sideways. Yesterday, it opened here, closed lower than where it opened. Still kind of in the sideways range today. So it's just kind of been stagnant in here. But I'd like just to see a decent day where it closes higher than where it opens. Is a little bit more confirmation to go ahead and get in. And again, that could happen tomorrow. And so I might just wait to add this one tomorrow just to see. Some of the other patterns look a little bit more ready to go right now. And then another one would be in that watch list, RCMT. And this little pullback right here, again, it's starting to work its way back up again. Here was an even high right here. This gave you a higher low, higher high. Sharp move up with a little bit of a compact pullback right here. It just looks like it's starting to act like an uptrend. So I'm going to go ahead and add this one as well, and we'll put the stop down below here, give a little bit of room. Let's take a look at the portfolio first before I add it. We're still just kind of we've been in this 95 to 98,000 range here. We still just can't get this thing back above 100,000. That's all right. We'll get there. Especially we start seeing the market kind of start taking off and get on a little bit of a bullish run. We should be able to get positive here pretty quick. I'm not overly concerned. SBOW. Now this is one that I'm almost at the point where it's like, I mean, the pattern still looks okay where that's corrective. This is impulsive. It should eventually start going back up. But what bugs me is that this is just sitting here, and I could use that money on other trades that look like they're moving right now. And so, I'm not going to do anything right now, but this would be an example of if CDR were to start to move up tomorrow and give me a little bit of that confirmation that maybe I just go ahead and pull the plug on this one and go jump into CDR or get into something that's moving. Again, the idea is that if this does start to take off, I could always get back in it again, but I just don't like to see that for 3 weeks it hasn't done anything for me. And now probably the time I get out is when it'll start taking off. But that's fine. I mean, you can always jump back in, and I like to have that mindset, but I just don't like to see it. I hate sideways moves. I'd rather have a trade go against me and get stopped out than have it just move sideways and just kind of waste 2 or 3 weeks where it doesn't do anything. It's not making you any money, not losing any money, but not making any money. I have a tendency to like things that go, and it comes from my option trading background. I like things that get up and go. You don't have to wait around. I like to, and again, good or bad, I like to see an action. GME it's still kind of inching its way up, trying to get going. I still like the overall pattern on that. SENS is down a little bit today. I do have to be a little bit concerned that this could end up getting stopped out. It really would need to start moving up here pretty quickly if it's going to hold that. I'd like the higher low right here. This chart formation has been pretty good, but today's move concerns me a little bit. You're starting to dip down a little bit too far, and we could be in danger of getting stopped out of that one if it starts to drop a bit more. ASAN, again, another one that, and this has been our problem is, some of these stocks that we're in, they're just not going anywhere yet. That'll happen. It happens all the time. Now this one hasn't gone long enough to where I just want to bail on, especially since it's so close to breaking out that once it breaks out, I think it could really start taking off. So that one, we'll wait for it to go. LOVE, same thing. You're just kind of waiting to break out. You got a nice little triangle formation here. Should break out to the upside when it goes. I've already looked at GameStop. I think that's it. I think we've looked at all of them. So let's add a couple more in and see if we can't get some movement here. All right, first one is going to be Jill. I'm going to put the stop. I'm going to actually put the stop down here, below this area here, like about 1550. Now, as soon as this thing can move up a little bit, I want to get that stop right below this low right here. But I just didn't want to start it there. I thought it was a little bit too tight because it's still possible this could be like wave A, wave B, wave C, and then it takes off. So I want to give it a little bit of room there. All right, let's add to portfolio. Stock specific class. Stop price at 1550. We did 100 shares. No, we're going to do more than that then. I'll do 97 shares. Let's do, no, that's too many. 500. So 500 shares, we'd be below the 10,000 allocation. I don't want more, but we'd also be above the. Usually, I want to keep that portfolio risk between 1 to 1.5. I mean, you could stretch it a little bit there, but I'm going to play this a little bit safer and let's see what 450 shares looks like. That puts us right at 1.5% portfolio risk. So I'm going to go and do that. Let's go purchase and go to my portfolio. All right, next one we're going to do is RCMT. And on this one, I'm going to put the stop down here, down below this low right here. It's about $5.75. $5.75. I could have put it down below here, but I think this is fine. I think it's down below this. I'd want to be stopped out. That gave you a higher low. This gave you a higher high. If it goes to a lower low right here, and you said, why not use that low? Well, I think I'm just going to use that 5.75 down below here, and it'll be good. And I'll look to adjust it if it starts moving up. All right, so let's add to the stock specific class, stop price at $5.75. Let's see what 100 shares looks like. Ooh, very low. We could do 1,000 shares. Let's see. 1,100 shares. I'm going to do 1,200 shares. That'll put us at 8,000 total into the trade with a 1.35 portfolio at risk. Now, again, the other thing that you have to be aware of when you're doing this is you gotta. This is the dollar amount. If I get stopped out, that's what I could lose. $1,284. If that amount is too high for you, and you would really freak out if you lost that amount, then you've got to reduce it. You've got to get it down lower. So even if the techniques we kind of follow here would be in mind, the numbers would be in mind. If you're not able to accept that risk, you got to get that down lower. So you might do, maybe you go down to 500 shares or something. Now that's a $500 risk, and you're only putting 3,400 into the trade. It means your profits are going to be lower as well, but we're okay with that. That we want to make sure we can accept the risk. That we're okay with the risk. I'm going to go and bump that up. I'm okay with the risk, so I'm going to bump that back up to 1,200 shares, and go ahead and place this order. And then one last one, we'll wrap things up, was Lilly, L-O-Y. I want to add Eli Lilly. This was off of the new buy list, off the muscle stock scan. And I'm going to put the stop right. There'll be a tight stop. I'm going to put it right below here at 255. This looks like wave A, wave B, wave C. And hope that's right. Hope that starts taking off there. So we'll if not, it'll just be a quick trade we get stopped out of. But let's go ahead and add this to the portfolio. And by the way, let me cancel that here. This should, if it does start to move up, at the very least, it should make a pretty sharp run right up to 275, that breakout area. It didn't quite get up there here. It should get up there. Now, maybe it gets up there and starts pulling back or moving sideways again. But we can decide what we want to do at that point. But there's usually a pretty high probability you're going to get this move, and that's one of the reasons why I want to add this in. Is this could be one that maybe we're not in that long, but it might give us enough of a move to where we get out of the deficit that we're in the portfolio, get above 100,000, and get moving on to other things. So All right, so let's add this one in. Stop price at 255. What 100 shares look like? Okay, so it's going to have to be less than 100 shares. Because of the tight stop, maybe I'll widen the stop a little bit. When you have a really tight stop, look, it's saying we could put 26,000 into the trade. Remember, I don't want to allocate more than 10,000 to one trade, so I don't want to have that big a portfolio size in there. Even though the risk would be very small, if I did get stopped out, I'd only lose $680. So there's two things. I could either just reduce the amount of shares, or I could widen the stop to give me a little bit more room there. I could look at 50 shares. So what do those numbers look like? I'm still above the 10,000. The risk is only $340. So let's see about widening the risk a little bit. Let me close out of this real quick. Let's see. Let me go down to go down to this low. Let's go down to 237. That way, if this is kind of wave A, wave B, wave C, down below here, or I could even put it in right in here. That might not be a bad one too, right there. That's at about 2. Let's see what that is at. $248. Let's try 248. So the first stop is at 248. I did 50 shares. At 13,000 there. What about 40 shares? Okay, 40 shares. I'm right at a little over 10,000. That's probably good enough. My risk is still only going to be $500 if I get stopped out. So that's a pretty small risk there. All right, so let's go ahead and add that in. There we go. We still have a good chunk of cash, which is good because, again, we're not quite sure that we're going to be breaking out here. Let me take one last look at the indexes. Yeah, the SPYs have weakened a little bit. See the Qs. Yeah, see the Dow. Dow was up here a little bit closer. We were looking to see if the Dow could close higher than where it opened. That'd be a good bullish sign. And again, there's still time. There's another hour left, but and the Qs have faded a little bit too. We were at a new closing all-time high, and now we're back. Actually, the closing high should still be there because this is where they closed on these days. So the closing high should be there, but we're not going to be closing at above a previous all-time high. There's previous all-time high. We did trade above it. Can we close above it? Right now, you've got an indecision candle right there, a little spinning top. Not a lot of confidence in that. And that's part of my frustration is, Tuesday, there wasn't a lot to talk about because we were basically could go either way. I thought, well, by Thursday, the way things look, we should have a little more clarity. Here we are on Thursday and not a lot more clarity. So, I get to the point where I just want the market to pick a direction and go. I don't care what direction it is, just start moving somewhere. I can trade. I can make good money when it's moving, and I can identify the direction it's moving in. But when it's moving sideways, as I always say, you end up working twice as hard for half as much money. So I'm not a big fan of sideways. All right, that's all I have. If you have any questions, shoot me an email over the weekend. Other than that, at least we're moving stuff back in the portfolio again. I went mostly to cash there for a little bit, and anticipating that we were going to get that little bit of a pullback. And knowing my luck, it'll probably happen now that I've kind of come back in a little bit. I didn't go all back in, so it wouldn't hurt me too bad if it happened. But we'll see if this ends up paying off for us. I like the new patterns we're getting into, and if only a couple of them work out, we should be fine and should get that total amount to get back positive again. All right, thanks everyone. Have a great weekend. And like I said, no class next Thursday. It's Thanksgiving. I'll probably be doing everything, the market update and the specific stocks, portfolio management on Tuesday, and we'll just plan on that one class next week. All right, have a great weekend, everyone. Bye now.